Yo guys, Leggy here and welcome to a new video. Today we're going to be doing the fourth episode of the Almost Daily Dividends Pie. So full credit to the dividend experiment for creating this pie. Basically it's a pie full of 50 companies, which if you invest £400 in, because that's the minimum threshold to get all of the dividends from everything in the pie. But if you invest this £400, you can get almost daily dividends throughout the year. So yeah, really good pie. Full credit to him. I'll link him down in the description. What's the difference between our two series? Basically, he stuck that minimum £400 in, and he's just seeing how much it returns without reinvesting the money. What are we doing in this series to make it a bit different? So I've basically tried to make it like an average investor, normal wage, where basically I'm just investing £50 per month and also reinvesting the dividends we get into the pie in order to almost try and give like an authentic investing experience like most people, and just see where the pie takes us that route. So how does a pie work? So it actually gives you 3.2% yield, which as we look at it here, it says, so if you want $1,000 a month, you use it like this: $1,000 times by 12 divided by 0.032, which is the yield, and that means that you'd need $375,000 invested in order to get $1,000 a month. So as you can see, you do need a lot of, that's a problem with dividend investing, you need a lot of capital in order to get these returns, but obviously that's the slow part. That's why people do have growth stocks within their portfolios in order to get the capital, in order to get these good dividends. So you know, but a diversified portfolio is good. I would just say that a lot of my risk is in crypto, and that's why I've stuck with dividend investing here for the most part. So the one thing I did want to actually speak to you guys about before getting into this episode is basically I saw on the trending pies, basically this person created a portfolio with 50 companies, high dividend paying companies that aren't on this list. So I was thinking, obviously, if you look at the pie, it actually shows you how the pie's performed over the last 2 years, and this pie, which we're doing the series currently, has given an annual return of just under 8%, whereas actually the other pie is only given 2%. But saying that, although you know with historical data, we know that this pie is basically superior, I still wouldn't mind, and if you guys would like to see it, I'll happily do it, but I thought I'd put it in the series first. I'd happily go and stick £400 into that pie as well. I'd have to, sell a few shares on different apps and stuff, but that's absolutely fine. But I'd go and sell, for those shares, stick it in this new pie, add £50 to both, and compare them. But obviously that would take the series in a slight different direction. So just tell me what your guys' thoughts are on this. So guys, that leads us to this week in our update. So whereabouts are we? How much do we have? So let's get into that. So we are down to £687.64, down about £10.54. That makes us down 1.51%. Although, why is this? So basically a lot of dividends paid out, and basically how it goes is that the stocks approximately drop by the same amount as their dividend paid. So that's one reason why some of the stocks would have dropped, because of like the heavy amount of stocks paying out. But the main reason is the S&P 500 dropping. Obviously the S&P 500 is a great indicator of how the global market's doing, and that is roughly down about 2.8% at the time of recording, whereas this stock is actually only down 1.51%. So in that sense, it's actually outperforming that, but obviously it's never good to see your stocks in the red. I'll add to this, but I don't want to carry on adding at a rate which isn't sufficient for the viewers, so it will be at the end of the month. Trust me, there's been plenty of times where I'm like, oh, I want to add to this because it's at a good price point. Always want to add to it when it's in the red. For some reason, it's just in my brain. But yeah, I didn't want to add more than £50 per month. That's why I haven't. So as I said, a lot of companies have actually paid out, with our total dividends on my account at 54p right now. But as you can see, in the last couple dividends, it's really starting to build up. So we've got a couple which paid out 5p, 4p. The ones which paid out 1 and 2p had a ex-dividend date of in October, and that's why it's a bit lower. So this week, Johnson Johnson's paying out, which we have already seen. Basically, Trading 212 actually holds the dividend for about a day. So on the screen, if you see the ex-dividend date being paid there, it's roughly, just as a general rule, it's probably about a day and a half later it actually gets paid into the account. But we've got Archer Daniels to pay this week, AGNC, EMR to pay out, and IBM to pay out. So quite a few paying out, not as much as last week, but saying that the dividends are really starting to pick up, which is really good. I do like dividend investing just for the fact that I think that getting all these notifications daily, it's just a bit of fun. It's like, oh, that's really nice. But saying that, I know I said earlier in the video about another idea. I've also went out and created a growth pie, which is actually really focused on the Becky index, which is where I focus on stocks which are really focused on female consumers, because apparently 70% of females in households actually make all the purchasing decisions for their households, and also they have a higher spending rate, meaning that I thought, it makes sense. But facing a recession, going for growth stocks may not be the best play right now, but I thought, I'll try it. I can make content out of it, and it's only a bit of a joke as well. But back to this series, I'm hoping that the result will go back in the green soon. But that's this week's update. I hope you guys did enjoy. Please leave a like and subscribe. Trading 212 has a sign up bonus, so if you want to use that, I'll leave my link in the description. I'll see you guys next time. Peace.